Sorry, you guys, we got this video out so late. We have hockey and football back in full effect, so with the kids, and we are busy, but we want to make sure we get this weekend analysis out to you before the market tomorrow. Now, the advantage of this is we get to see a little bit of the pre-market here on Sunday, just to see what's happening from the open. And we'll check that out here on the free video. And then the patrons will check out the what the new official trade is on Roku and see where we are going from there. So if you're new here, go check out the Option Center logo on the bottom right-hand corner. Press that and subscribe. If you want these videos very often during the week, each weekend, and almost every day, then hit that notification button and don't forget to like. It really helps us out here. So let's get into this. We are SPX on the week. Let's dig into this. We are wave 3 here, the megaphone, wave 4. We're working on wave 5 at this point. We are on primary wave 5, intermediate wave 1, 2, 3, and what we think we're working on wave 4. And if you notice from this point of view, let's move in a little bit closer. It looks like we're really just going to make a back test on this megaphone here. And I think that's very, very, not a coincidence, but I think that's very unique that we'd be working on this wave 4 here just to retest this megaphone rising pivot. And then we can move on from there to wave 5 of 5. And then we'll go down to lower time frames to check that out. But I just want to show that we're pushing off the 20 MA. We pushed off of that, had a nice bull doji there. We'll go in even closer and actually had a little bit of support there from this as well. I don't think it's going to hold. We bust through it a second time. And we're having a bounce here pre-market as well. But a third time would be a charm. And I think from there, we really start to accelerate our move. So that's what I'm looking at. Let's look at the MACD. We have that 50, by the way, MA on the weekly, coinciding with the 382. And around that 440 area and the rising pivot. So if we actually pierce through the 382 with fast momentum, we'd probably get a nice big wick from the 382 area if everything works out what we're looking for. We do have to get through this rising pivot here. That's a minor support there, but I don't think that's going to be able to stop this move at this point. We will keep an eye on that though, but you see the actual momentum on the MACD. We have the bearish divergence really taking effect on the weekly time frame for the MACD. You see the histograms really accelerating, so that's why, you know, we're looking at the acceleration here, and we should see that in price action as well. And the same thing with the RSI. We're really breaking down from that overbought area. Also, the bearish divergence is happening, and I do expect us to make it down to this 50 range here on the RSI, where we'll probably see ourselves maybe breaking through a little bit of the RSI and coming through, and actually when we get down to our support areas, that should be around the possibly 40-50 range where we start to make our ascent to wave 5. And that's very, very common for our wave 5 to make a really, really big divergence for the bears. So we won't make new highs. If we do, then we have something else really going on that we don't expect, that we didn't expect to happen. So yes, we should come down. We should come up and make higher highs on the for the fifth wave in the primary and intermediate term. We should make a higher high, but we should not make a higher high on the RSI or the MACD, creating another bearish divergence, this time a little bit more severe, which would possibly bring us into the end of our bullish market. Yes, I did say that. That's very possible. So let's not jump into that yet. Let's work on what's happening now, and that's our wave 4 move to the downside. And let's move over to the daily time frame. Trend is our friend. and then we can dive in there. We had our ending diagonal broke down, back tested, and now we're just trending with the 8 MA. Do I suspect we break above it? Perhaps. Again, now we are... we'll look at the futures, but looking from this chart here, we're testing the 8 MA again. We very well in the morning could be heading our way down for a wave C. Our Elliott wave count at this point, we're looking for an ABC correction. Some people think all over FinTwit and whatnot, we're looking at an ABC, and the C is over, and people are looking for that new all-time high from this point. Sure, it's possible. I don't really see the actual support. It's a minor support around this 4,300 area that we've tested multiple times, and we wicked through and came back above. So that is bullish in itself, but we'll see where we actually go. If we can't break above this high here at 4460 area, then we're going to definitely start our descent down. Now, do we get past this 23.6 and call it a day with an ABC correction, and then start our complex, the rest of the complex move on a wave 4? It's natural, but really what I'm looking for is an ABC down here. We want to go to that typical 382 area, but do I think we'll make it all the way down to it and past in this first run? I actually think so. Yes, but if we don't, we have to be careful how we trade this. We want to take off positions, take profit as we move down. We have the 200 MA, the 200-day moving average. This is a simple version right here. So sure, we might get a little bit of a bounce here, and we want to take off some profit at that point. Because if we stop shallow of the 382, this could be a some sort of flat pattern. And if we get a flat pattern, we could stop short here for A. We'd have to move our A up, and we would go either test the highs or even surpass in an expanding flat above there, and then make a new low lower than the A and the C. And that C might just come down to the 382, where that would complete our flat pattern. So we have to watch out what kind of flat. You can look those up, you guys, on Google and see what type of flats there are. There's the running flat, where we would come down to the A, which I would suspect we'd come all the way down to 382, make a higher high on the B, and then make a higher low on the C. So that would be a running flat to where you're actually expanding, where you're actually making higher highs and higher lows, and then you continue to the upside. Then there's your regular flat, where we wouldn't come all the way down to 382. We'd come down, make a higher low here. We wouldn't quite get to the higher high, so we'd have a lower high here on the B, and then make a lower low on the C underneath. Probably hit that 382 plus a little bit more. I don't see that happening so much because of this really big megaphone rising pivot here. So I really want to see something more of a triangle pattern, which means that we get our big ABC down here, test that pattern, bounce off it. We could wick through the pattern through the megaphone rising pivot as well. So you have our ABC down to complete the first A wave. And so that would give us a perfect scenario for a triangle, perhaps. And then we might have our B, where we try to test the top, our C, where we retest the pivot. It could end there at the triangle and we start going to all-time highs. Or we could have an A, B, C, D, E, where we test it even one more time throughout time, and that would take us into next year. And then we actually, so that would be a triangle that we make, and then we start moving to the upside. So this is this is really the telltale of what really is going to happen if we get our big move. It's not going to be slow, you guys. It's going to be the waterfall we talked about last week. It's going to be a big move. That you think is going to go forever. You even think it's going to keep crashing, that we made our top, which is always a possibility, but I don't think that's probable. I think we still have another move up. So we'll watch this this next move up. Let's see how high we can go before we suck in all the bulls, and see if we can make another lower low and make another divergence. And not the MACD. We didn't make any bullish divergence here yet. on the daily, but let's see if we can move our way down there, make a divergence, and then start an ascent up, not for the all-time highs necessarily, but for a test to the top, a fail, test, fail, up. Okay, so we'll do these each and every day. So don't forget to hit that notification button, and we'll try to get you in this and keep you up to date as often as possible, especially when we really think something's happening. So we already talked about the week, the follow through here. We're on the minor wave C of what we think. We had our A down, B up, and we're working on C here. So what we really think, let's go down to the 65-minute chart. On the SPX, we use 65-minute candles just so we can get a even candles throughout the trading day. So we had in the red, we have our A wave, B completed there. We made a lower low. So now we think we're in this in these minor wave C with a minute wave 1, 2, 3, 4, 5 to complete it. I don't have the numbers in the proper places for that, so don't use those as a price levels. So what I think we completed wave 1, we're working on wave 2. We don't know if they'll make it to the golden ratio of 61.8, but this whole zone is here between the 786. You have a gap there in the 618 where we suspect it will come up to, and then we should really start to accelerate 3, 4, 5 down. And really what this measured move is here, we have the ending diagonal starting way down here. Some people have the ending diagonal starting at this point at 61, 65, so that's their target there. But I really think we started ours here at the 40, 56, and we had the beginning there. So that's a measured move target from an ending diagonal at that point where we had wave 1, 2, 3, 4, 5. And then we should get down here. And it just happens to coincide with that 382 area and also a 1618 extension from wave A to B all the way down. So really have a nice solid confluence of area down here that we could really depend on, in our opinion. If we get down past this rising pivot here, the minor rising pivot, you'll see down a little bit lower the from the megaphone from the Corona crash. Okay, so let's move on to the VIX futures on the daily. And what we see here is I have all my alerts set. We didn't hit any targets yet, but the notable part is that we broke out of this wedge. We back tested, and really what we're doing, it looks like, is sort of a 1-2-1-2, very choppy motion that we're going sideways. So our next target here is the 25 area or the breakdown back under 20. If we break back down under 20, chances are that we're going to higher highs, and we're really bullish on the market. And I don't think that's really going to occur, because that's going to be a fake break from the falling wedge here. I do think that we're actually starting to make our ascent. We're making higher highs, higher lows. So low, that's our low. High, high, that's a higher low. Higher high. And we're looking higher low here, back testing the wedge, and we'll see what happens. This is sort of a consolidation move, but a break above the 25 or a break below the 20 really define what we're actually doing in this market for the VIX futures. And if we break over the 25, you know what, I think we're really going up to this 36 minimum area here, and that's where we have our targets here for our patrons. So I shared that the other day, so I'm going to keep those on there for you guys to see. We want to move over to the SPY, see what was happening on the volume, and also get another good look on what's happening. You see I have the day here with my alerts, so I see whether this is going to be an inside day up, inside day out. We have the huge red candle there, and I don't even think that's actually huge on what we're going to see coming up, but we're inside there with a nice red green candle, but it's still an inside day. We tested the 8MA, but look at that volume. The volume's still pretty big with an inside day and a push off of the 30, or in this case, the 429 area. Still some good volume, but nothing for us to say that this is a major reversal at this point. If we get above this 8 MA, sure, that starts to change a little bit, just like this other one, but we really have to face this now descending 20 day moving average. It's a simple, and also this 50 is right at the top of the gap, so that's really going to be a tough area, confluence, the gap area in these two MAs to get through, and that is going to be a lower high if we do push to that breaking point up there. And I'll show the patrons why I do think we're going to push to the limits on this, why we suspect. But if we don't make a higher high here, we stop at those MAs and that gap, then I think we're moving much slower. Let's go to the ES. I didn't prepare to have this, but I just wanted to show, since we're since we're in this time frame of Sunday night where the market's already open, I want to show you what I have on this. There's tons of lines here. These are, I do have a video on support and resistance and drawing these lines. When you day trade, these lines are very important for daily resistance or support, weekly, expected move. I have everything on here, so I can really get down to these. The point of control, we have a nice volume node here that we formed last week. And now we came back from this channel that we formed, broke out of the channel, came back, back tested, and now we're actually pushing a little bit higher in the pre-market off of this point of control. And so let's see if we can hit that 618 to 786 area of retracement from this high here to equal a wave 1, 2, and then start our wave 3 descent down at that point. Okay. So next, let's go over back to the SPX. And let's just do the options expected move for those who are watching this. The options expected move, we have been very orderly for an amount of time, and then we had a big move breakdown where the volatility, when the volatility increases, you see the options expected move actually increase as well. We didn't make any move here, but we had a nice big move to the downside, increased the volatility, and didn't actually move anywhere on the week here. And then we started getting inefficient at that point because it's probability that we'll hit either the end on the bottom end or the top end, but we didn't hit any of those. That's a sign of inefficiency. And then the week after, we broke through it, also inefficiency. The next week after started, broke down, and never returned from the options expected move. So you see the options market, it cannot get its hand around what its head around what's happening. And I do suspect this is still going to happen. If we break back through this options expected move, you know, it just could rip to the downside or to the upside at this point. We can't tell, but if we start moving to the upside, I suppose volatility would start to decrease a little bit, but the move would be fierce. So don't discount the upside. We possibly could hit this upside first before actually starting to move back to the downside severely. In our opinion, what's happening, but we'll see at that point. We'll have to watch price action, you know, watch these MAs. You see them crossing back to the upside. You have the hourly bullish divergence, so that could say a lot. We'll have to watch. We're not going to play to the downside aggressively until we see some sort of pattern, maybe a candle or something that gives us some sort of clue that we're going to start heading to the downside. Otherwise, we'll keep playing it up. If we decide to go to all-time highs, we'll be in it and go from there. So it's all about trading. Trading's watching price action, playing it, and playing it cautiously. And don't forget each day to you know, start learning how to hedge your positions, because we're getting a lot of overnight action. You see gaps here, gaps there. Gaps, and a lot of the action happens overnight, and you gap into something that you weren't expecting because you were not hedged. You know, if you want to learn about hedging, you know, come on my Patreon, and you know, you can even ask questions in the options guy. It's down. It's a free Discord, down in the description. Join us there, and then we'll see what we can do to help you with the hedging that is required for these types of volatilities moves. So that's it, you guys, for the free video. So thanks for joining me here. I just wanted to get this out. I know it's a long video, but there's a lot of information here. So thanks for joining us here at Option Center. We will talk to you soon. Patrons, stick around.